Welcome to this very special podcast where we're examining the impact that location is going to have on insurance and is currently having on insurance, and what we're formulating or we're calling location intelligence. We're going to take a little different approach here, and we're going to look at what the impact of location is on the actual business of insurance, not underwriting, but the business of insurance. And with me today are two knowledgeable guys in this area, Billy Ormerod, who is a senior account executive with DMTI Spatial. Billy, thanks for coming on.
Thanks, Rob.
And with us as well is Peter Silk, who is a 20-year veteran in the space and a wealth of knowledge, and we're going to tap a lot of it out of him today, and we're going to put it on video so that everybody can participate. Peter, thank you for being here.
Thank you, Rob. Thank you, Billy.
So, Billy, let's talk about the business of insurance and how this location industry can actually help sales and marketing. Let's move into there.
Yeah, so Peter, during the last podcast we did, we were talking specifically on the underwriting side, but I was wondering if you can give us some insight beyond underwriting. Is location intelligence used in the insurance industry, and where within the business is it used today?
It has been used sporadically within the sort of sales and marketing areas or working on specific programs with brokers, but it's been fairly inconsistent, using sort of a mishmash of different data sources to try and come up with some type of marketing plan. A lot of times you will try to do a bit of a marketing blitz to a certain area, but it's really been based on phone books or D&B or Equifax type data solely to come up with industry names, addresses, etc., which take a lot of manual work and a lot of manual scrubbing of the data to even come up with a preliminary business plan. So it's sort of a yes-no answer. It's been done, but not in any real professional and high-level quality data way.
Yeah. So you got sales and marketing that have done some stuff here or there, but really, we'll call it the powerhouse as far as location intelligence within the insurance company has been underwriting. How well aligned are those? Like, are they just completely, two islands, or do they communicate? Do they do things together? Because I see a lot of dependencies on both sides of it.
Yeah, there is a lot of dependencies, and probably more than the departments historically have utilized or seen themselves. The need is there, and but the level of data exchange probably hasn't been in the past. It's starting to get there. People are talking about it more. A lot of cases, they're just trying to use the existing underwriting data to market to current clients, and that's fine. But that relies on, again, the underwriting machine having the right location information. But when you're looking at new sales prospects that the underwriting piece wouldn't have because it's not business on the books yet, that's where it's sort of still falling down a bit. And a lot of brokers need assistance in terms of mini marketing campaigns, or if you're writing a type of program, you certainly want to market to that class of business that you're targeting. And that data has been historically Yellow Pages level and other data sources, one-off data sources to try and get that data. So the marketing departments really have two means: is use underwriting data that exists to the current, but also really struggling to find a way to better market to a broader community. And that's where I think the push to put together data sources, not just one-off, again, address level, is becoming more and more critical.
So if you could take that knowledge in underwriting and essentially create a location intelligent product for sales and marketing, what would you believe, like, what would that look like?
I think what it would look like would be one massive data source. And that's where the issue always comes into play, where do you get that data? Is it real time? Is it accessible to everybody? Because it's not just good enough to have your own company data available. That's just your book of clients. That's just your book of insureds. But you're always marketing to a greater population. If the historic retention rate in the industry is 85%, 80%, depending on the company and the line of business, then you're always looking to replace that 15, 20% of your book every year. And that means knowing who to go after, knowing where to go get that business, where are the auto body shops, where are the printers, where are the food distributors, and how do you get that data and underwrite to that data. So if you could see yourself having this one consolidated real-time database, it doesn't have to be housed inside. You can reach out and get that data. It would be a huge assistance to the underwriting group and to the marketing group, because to be using the same type of data to make the same type of segmentation decisions.
So even just see my territory, see the rating, like where I should be focusing my time and effort has significant value.
Absolutely, absolutely. Because the one thing about the Canadian market is when you get outside of the greater, larger cities, your need and your ability to market to similar classes is hard because of the fact that they're so spread out, and there's only so many of a certain class in the Atlantic or in Manitoba or wherever you are, and you need to have that information to go get that, to get the data to go get those risks. And it gets harder and harder and harder if you're trying to market a national program. So having that data available to you is becoming more and more critical. And the same data can be used then to make that underwriting decision, or make that area of the business that you just specifically want to go after.
So expanding on that, so multiple lines of business. So if you can really consolidate your customer data and understand, who's the one of three product lines, and in a neighborhood where they have a tendency to buy other products, would that be of value? So really just putting it all together and really target marketing the people that you that are most receptive to that product and are in the areas you want to market to.
Yeah, it's I mean, the package business is always better than writing one-off lines of business. Your retention rates are higher. Your ability to market to the client from both their personal lines and their commercial business is great. So if you can put together data sources about that client, about that insured, he owns a business, she owns a business, then you also know they own the house, they own the car, they own a recreational product of some sort, your ability to market to all of that. But then at the same time, the company's got to be able to deliver the capacity to write all those lines of business. So that is a marketing decision on its own. If you are a monoline type company, fine. But if you are really interested in the package business, the ability to get all that data and put it together is critical. Because a lot of times the address of the client for the business is obviously different from their home, but you're really targeting the same person in a lot of cases.
Mm-hmm. And typically, like from your experience, do you see product information about customers being stored by product, like so they're kind of siloed off? Because we see that in other industries as well. Like, so they're really the understanding of what your wallet share is limited by the data being separated and in different standards.
Yeah, the historic way of underwriting the business either was by line of business, so you were writing the building, a separate policy was writing the automobile, the separate policy was writing the casualty, and then you also had a completely separate department writing the personal lines. The need to sort of put that information together in terms of what is the big picture of this client is growing. That's why the package business is becoming so critical to write all lines and then tack on the personal line side of it. But it has been historically hard for a company to put that big picture together in terms of the client. And any help that can be there from data is going to be valuable.
I have one question. I think you alluded to it, Peter, which was about retention. One of the things that perception may be that when you have an insurance policy for your location, your business, or anything, it's kind of sign once, forget, and then every year I think we're all the same. We just renew and we just continue without consideration that the neighborhood may have improved, or the business may have improved, or the foundation may have improved. So does location intelligence give you an opportunity to do kind of proactive customer retention, so that you know that you're in your customer's business a little bit more, or you're adjusting as they're growing and the neighborhood accelerates and grows with it? Is there an opportunity for that kind of stuff?
Yeah, it's historically the retention has been based so much on the experience that the company's had with the client in terms of claims, etc. But yeah, if the companies can get better information about an area, about a class of business, and how it's performing, then yes, they could certainly target retention a little differently to make sure that they retain the clients that they really want to retain. So you're right, if an area is undergoing a huge transformation, then that could be of real value to a company to say, listen, this is a really good area for us. Let's look at what we're writing there or not writing there, and target differently, including retention.
Peter, do you see location intelligence as a way of increasing the speed of your business on the sales and marketing side, and potentially increasing customer satisfaction, whether it be directly with the insurance policyholder or even with the broker agent community?
Yeah, absolutely. That's a good question, because the speed is becoming everything. A lot of the, I'll call it the smaller business, is often called micro business or small to mid-market business, is becoming so automated that the series of checks and balances that the system is going to need to go through, in particular pulling the data that you can provide, is becoming critical. So the broker wants to bind that business quickly, efficiently, accurately, and that data will help do that, because you won't have the underwriters necessarily handling that business. The system will look at a lot of the risk characteristics to do that, and then push out the ones that aren't meeting those criteria, and then you can look at those by exception. So absolutely, the data is becoming critical to market and to underwrite the business in a more automated way. And that's all going to rely on accurate data coming from a source such as yourself.
Excellent.
That's great. Well, thank you guys for offering some insight into this. I really appreciate your time. We've been speaking with Billy Ormerod, who's a senior account executive at DMTI Spatial, and of course Peter Silk, who's a long time 20+ year veteran in the industry. And we really appreciate your time and your insight into this industry. Thank you guys.
Good, thank you.
Thanks, Rob. Thanks, Peter.